Hello everybody. For those of you who don't know me, my name is Fred Burke, also known as the Wholesale Mentor. What I would like to go over in this video is explaining foreclosure options to the homeowner. This is a must if you're going to be in the foreclosure, pre-foreclosure business. Whether it's short sales or pre-foreclosures, you need to be able to correctly explain the options that are available to the seller. You must be honest and ethical at all times, and you want to let them know what their options are. So let's get started. Number one is reinstatement of the loan, basically a cure. This option is paying the lender everything that is owed in one lump sum to include missed payments, any late fees associated with these payments, foreclosure fees, legal fees, and the principal owed during the delinquency. A cure may involve the seller curing or deeding it to the investor subject to the existing loans who will cure. There is a risk to the homeowner that the lender may accelerate the loan because of the due on sale clause, and the homeowner no longer owns the property and has no recourse of the investor if the investor doesn't pay the loans. But we all know about how to get around the due on sale clause, and if you don't, you can get that information at totalfinancialliberty.com. And I've talked about it in a lot of the videos at www.theaffordablementor.com in the free video section. Number two is a repayment plan. This is a written agreement between the lender and the seller. These plans require higher payments than the regular monthly mortgage amount for a set period of time until the loan is brought up to date. Number three is a loan modification. A loan modification involves changing one or more terms of the mortgage. Modifications can be considered to reduce the interest rate of the mortgage, change the mortgage product from an adjustable rate to a fixed rate, for example, extend the term of the mortgage, or capitalize delinquent payments, add delinquent payments to the mortgage balance only available in extreme hardship situations. Modifications are not easily granted, and there must be strong justifiable reasons for the request, so the seller must seriously have a hardship. Number four is forbearance agreement. The lender will allow you a period of time, sometimes 3 to 6 months typically, of either low payments or no payments at all unless the loan is extended, which happens rarely. The later repayments generally will have to be higher than the original monthly mortgage payments until the loan is up to date. Number five, special forbearance. This is including FHA loans. FHA allows eligible borrowers to postpone monthly mortgage payments for a minimum of 4 months. While there is no limit on the maximum number of months, at no time may the agreement allow the delinquency to exceed the equivalent of 12 months PITI installments. That just means principal, interest, taxes, and insurance installments. Number six, a deed in lieu. A deed in lieu is an option in which a borrower voluntarily deeds collateral property in exchange for release from all obligations under the mortgage. Deed in lieu may not be accepted from borrowers who can financially make their payments. If a borrower qualifies for a deed in lieu program, they may be eligible for a cash back from the lender, as in the Cash for Keys program. You clean the house, you turn it over to the lender or the lender's representative, and they give you a check. Normally, I think it's around $2,500, but that's usually negotiable and depends on the amount of the house and a few other things that the bank takes into fact. Number seven, cash sale. The borrower sells the property, pays off his loan, and depending on the equity, may net some cash out of the deal. The challenge, of course, is being able to sell it quickly enough, which most often requires a substantial drop in price. Number eight is the short sale. The borrower makes an agreement with the investor to sell it for less than what is actually owed, subject to approval of the lien holders. This generally results in no cash to the homeowner, but it'll be better for the homeowner and his credit than a completed foreclosure. Number nine is a refinance, which may be hard because a lot of times when you're behind on payments, the damage has already been done. But the borrower may be able to refinance to get a new loan, but generally, again, this is difficult for the buyer with little equity and poor credit. The new loan likely will have higher payments than the old loan. Number 10 is do nothing. The worst choice for the seller, of course, whose credit will be ruined, but he can stay in the house for several months for nothing, save up some cash, and move the lender or the high bidder from the auction, eventually evicts the homeowner. Explain each of these choices and be honest with the homeowner. In many cases, he will trust you for your candid explanations. You may lose a deal or two by offering homeowner choices, but that's actually better than your offer, but that's okay. Always take the high road and you'll have a long and prosperous business in real estate investing. You want to be upfront with your clients at all times, and you want to let them know exactly what all their options are. And again, they will trust you for your honesty and you being candid with them. And the idea is we're in this business to help people, not to hurt people. It has to be a win-win situation. So we're not just there to go ahead and short sale their house. If they have other opportunities that are available to them that may be better for them, then that may be the route to go. So again, this is Fred Burke with www.totalfinancialliberty.com, also with www.theaffordablementor.com, where you can watch all these free videos at one spot. Just sign up at the bottom and you'll get an automatic password generated through an email that'll let you in to watch all the videos. Until the next video, we'll see you then.